Hello everyone, it's Kate Hill from Adviseable Property Buyers. I'm here with Tina Howes from Smartmove, one of Australia's leading and most award-winning mortgage broking advisory firms. They specialise in residential and investment property lending, and I've come to ask Tina for an update on what's happening in the residential lending space at the moment. Tina, since we last met, it's been a couple of weeks, so tell us what's been happening with lenders and in the lending space, just generally in that environment.
Thank you, Kate. So I'm excited to say that so much has been happening. Everything that we've been waiting for, I would say, is sort of starting to come through. And probably the two biggest things we've seen, the two rate cuts, which is obviously impacting on the rates that people can borrow.
Yeah.
We're seeing fixed rates come down. But in terms of borrowing capacity, that's the one that we've all known was coming, and we've been waiting for it, and it's arrived. So finally we've seen an implementation of a new assessment rate. So what does that mean? Previously, the banks would assess a loan at a rate of between 7.25 up to 8% for some lenders. Yeah. The banks now have permission to set that rate themselves, as long as it's no less than 2.5% above the actual rate. Now, we're seeing many banks jump on board and implement that. We're also interestingly seeing some lenders choose to not implement that reduction at all. ING, for example, they position themselves at a very competitive rate. They have an abundance of business and have decided to offer that excellent rate to people that possibly are not borrowing their absolute maximum. So that's probably created the biggest change. People are, particularly people that have been sitting on the sideline, not necessarily able to buy that next property. The phone has been ringing. People with interest-only periods that have expired, rolled onto principal and interest, are now able to get those extended. So that's probably the biggest key. The second one to that is changes to living expenses. So essentially the bank has a minimum amount that they deem is appropriate for you to live off. Some of the lenders, particularly those that had very low levels, have actually decided to increase that level. So in that example, for a client that has particularly low living expenses, while they may have benefited from the change in the assessment rate, on the other side, the living expense amount has increased, which has actually offset any benefit in borrowing capacity. So that's not for everybody, but that has happened for clients that are declaring low living expenses. Now, what does a low living expense mean? It means that, someone that is not declaring a high amount. And people do that. People do live frugally. Yes. But regardless of that, the banks are saying, well, I'm sorry, this is the poverty level and this is the minimum amount based on how many adults in the house, how many children, what income for some lenders, and what postcode you live in.
So how does that tally with the lenders actually going through people's bank statements? So say you're declaring a certain level of income and you can prove, income, of expenses, and you can prove that is your expense, and here are my bank statements to prove it. They will still use that, yes.
Yeah. And I would say in more than 90% of circumstances, once someone actually goes through their bank statements line by line, they realise that, whoa, actually, we are spending a bit more money than we realise. We are seeing a lot of the lenders that did need sort of 3-month bank statements and went through that line by line, pulling back a little bit on that. It was only a couple of days ago where we had one lender announce that they only want 1-month bank statements, having gone from that sort of forensic accounting type process where they went through line by line. And they've said essentially they still want your bank statement, but they're not looking at that. What they're more looking at is undisclosed liabilities or medical health costs, childcare, university fees, that kind of thing that maybe hadn't come up in your living expenses. But there was a court case with Westpac, and that drew a lot of attention to living expenses. And I think, I love this, it's a classic quote, but the judge actually said, I may eat Wagyu beef every day, washed down with the finest Shiraz, but if I really want my new home, I can make do on much more modest fare. And that's the logic that I think so many of us have been crying out, whereas the banks have been looking at your historical expenses. And that, in my eyes, does not dictate what your behaviour will be going forward.
Yeah.
So I'm hoping to see some more latitude in that area. Absolutely still making sure that people have a good grasp on what their expenses are. But in terms of those discretionary items, then, you know, I don't believe that should impact what you can borrow now if you have the ability to rein those in.
Yeah.
So they're probably the biggest keys. We're seeing buyers back in the market. Yeah. Over the last sort of couple of months, buyers are back, but the stock is not there.
Yeah.
But, you know, more and more we're seeing stock come onto the market. Agents are saying that. Clients are saying, wow, there's actually stock. We're seeing cooling off periods disappear again, which we were so excited when they came back. But that's okay. It just means that we're doing a bit more due diligence up front. And also making sure that, you know, we have definitely the right lender, and that we're not absolutely going to that lender that is the only option for you. We have seen lender turnaround times blow out a little bit. Whether that's the banks just not hiring more credit officers or don't know what that is, but, you know.
So you mean the time it's taking
to get an approval.
Lenders to process? Yeah.
Yeah. We've actually seen a couple of lenders decide that they won't be doing pre-approvals anymore, which is unfortunate for them because it just means we won't be going to those lenders. But they've obviously decided that pre-approving is a cost to them that doesn't convert. So it's handy to know which one those lenders will be. That's what your broker's there for.
Yeah.
And they're my key sort of tips on what's happening in the mortgage and finance world.
Yeah. Thank you.
Welcome.
Whether you're looking for a refinance, a new loan, or simply a financial health check, Smartmove can help you. They have a strong relationship with a panel of over 30 lenders and can get your finance moving. So contact Tina today.